One thing we can all agree on is one, market moves in an unequal wave. You understand? So, market has three phases. The first one is your uptrend when the market is going up, sideways trend when the market is moving to the side, and down trend. Then three, usually after a sideways trend, the market embarks on an uptrend or downtrend. This is without looking at anything like support, resistance, and everything. You understand? Just looking at the market. This is actually like what you can actually like, establish. All right. Then also, for the market respects certain area of structure. So when I say the market respects certain area of structure, I basically mean, let me show you. I'm going to show you something now. Let me show you something. I'm going to go to the past. I go to the past, all right, and you see something now, yeah. I go to the past and you're going to see something. Then I'm going to look for one very, very just match here. Let's not do match. Let's do. We can do match. I'm looking for a very good support. Okay, let's do this. Let's do something like this. Now, what is this? This is a resistance, right? All right, you can call it a resistance or an area of structure. Area. All right. So I may decide not to call it a resistance. You know why? Because this same thing I'm calling resistance is still a support. Do you understand? It's based on the direction of the market. So, like for example, now if the candles are actually below it, it's a resistance. But if the candles are actually above it, it's a support. Do you understand? So if you notice here, you can see that the market kept respecting it. So this will actually tell you that there are different ways of trading Forex. And that's why I'm trying to teach you this thing now. Because now I can look at this point now and see, okay, every time the market got here, it always respected it and came down here. And I've seen that the market have been doing for a while, let's say from here. And this is why this thing I'm doing is very, very important, all right? I'm teaching you the input tools of the market, all right? So every time the market came here, the market respected first, second, third, fourth, Now the market is coming. Let me use this replay tool, which is a replay tool here. Every time the market got here, it always respected it. All right, it always respected this yellow line. All right, that was the first, second, third, and shift and fourth. You understand? Now, if you calculate how many pips the markets moved from just here to here, that is about 30 pips. And how many pips the market moved against is not up to 5 pips. All right, that's a risk to reward ratio of like 1:6. Yeah, so now the market has actually respected and it has fallen down. Do you understand? And now the market is coming back down there again. history shows that whenever the market comes here, it respects it. At least it has done that like 4 different times. So basically now you have history, all right, in your favor. The market has been respecting this area, right? So now, as the market is coming here now, if I take this trade for a sell when the market comes here, there are two things. Either the market, one is either, what the hell is wrong with this thing? Either the market sells or buys. I see it now. So there's a 50-50, this is a 50 something. Because the market can hit here and respect that it has been respecting before, or it can break through. You understand? Now, if I now employ a good risk to reward ratio, all right, if I employ a good risk to reward ratio, then I can have it like if the market doesn't respect it and buys, I will lose. Let's say if I'm using 1:6, let's say a good risk reward ratio of like 1:6. If you don't know what it actually is, don't worry. This session is actually recorded. So as you go through the MT4 preliminary course, once you're done, if you come back to watch some of these things, you're actually going to understand what risk reward ratio is and going to make actually understand it better. Okay. Let's say I'm using a risk reward ratio of arrow of like let's say 1:6. So that means if this market does not respect it and it buys, so if the market buys, if the market buys, I lose 1%. But if the market sells, I win 6%. This is now this would have actually been a 50-50. This is actually a 50-50 probability here. But because of this little thing I've actually employed now, I've actually like tipped the scale in my favor, because if the market comes here and buys, okay, I'll lose 1%. But if the market actually respects it and sells, I'm going to make 6% profit. Now let's see. So that basically means even if I have two losses, all right, let's say I'm trading something like this here. If I have two losses, the moment that means I've lost 2%, the moment I win one trade, I'm going to win 6%. If you remove 2% from 6%, I'm still left with 4% profit, so I'm profitable. Do you see it? So that's why I say there are different ways. All you need to actually understand is how to use risk to reward ratio to your advantage, how to move your stop loss to break even when the market is in profits, and how to spot these repetitions in the market. You understand? You can actually trade off of anything. All right, so let's see what actually happens. So you see it, the market touched here and fell down. Let's see how much the market fell in favor. Boom. So you see it now, this trade has given me 6% already. I've collected 6% on that particular trade. So the market, it even fell even further deep self. If it's me, I keep moving my stop loss to break even. So I could have even cut up to like, let's just say 6%. Let's say 6%. Let me actually bring in that concept of confusion. All right. Now, of course, 6% again. Now, the market is coming back to that point again. And when it came here again, I took another one again for another sell, trying to capture 30 pips with a 5 pips stop loss. And let's see if it's my stop loss. I doubt it. Okay, this is my stop loss. So I lost 1% here, right? But the market's respected though, but because my stop loss was very narrow, I lost 1%. And the market came here again. I took another one again. And see it fell down. You see it fell down. So I cut another 6% again. So I won 6% here. I lost 1% here. 6 minus 1, 5%. And I won 6% again here. 6 minus 1, 5 plus 6, that is 11%. Just from just trading just resistance. You see it. So most times, the reason why financial profit is not that, especially when it comes to MT4, it's just because you don't really understand how the market moves. Right now, there are these repetitions. Just tailor it to your advantage. You can actually make money off of anything. You understand? And that's the same basis of price trap. The market is trapped going from support to resistance. No wahala. Take your advantage. Use a small stop loss, a good profit target. You can actually catch up to like 1:4. You understand? If the market does that, respect like 5 different times. That is 20% profit already for you. Do you understand? That's actually understanding you get. So that is just like that 11%. That's if you risked 1%. So now imagine you now risk 4% per trade. You'd have made 44% just from this because 11 times 4, your profit was 11% if you risked 1%. If you risked 4%, your profit is going to be 11 times 4, 44% just from this. So imagine you actually had $1,000 account from January 24th, from January 29th to January 31st. You made $440 just from this thing with a risk of just 4%. Do you understand? With the risk, but then for you to actually see this pattern repeating itself, you have to have actually like observed the market to actually see that it actually should respect things like this. But that is just me explaining this to you. Now look at the market got here again. We are on 11% here. Let's see if it hits stop loss. 4.4 is not 5 pips. It does not hit stop loss. Let's see. It is stop loss here. So it took 1% again from you. And then probably decide to stop. Or you decide to go again, but you can't sit now. You decide to stop after this one because of it spend time above here. You know, it took its time above here, and it was not like expressing like see this one now. This one that hit stop at that time just hit small and fell down. But this one went above. Like already broken it already, so broken retest and all those things. Yeah, so you just decide to just cut that down. 10% after what you got on that. But that's not even what I'm even trying to teach here. But you understand what I'm actually talking about now. You understand? If you actually understand this thing, you can actually like trade off of anything. You get. So this is actually what I'm trying to explain now. Now look at this thing. You see this yellow line at the market is the yellow line here. Look at how can I make this thing move faster? Okay, it's moving. Just watching. Watching what the market is doing. You're seeing the market, I mean. Do you see? What did the market do when it got here? It respected it again, right? This was a resistance before. It respected it now as a support. You see it respected it again before it finally broke. So if you were targeting the same point when the market came here again and you took it for a buy, the same 1:6, you would have actually got less 30 pips. You'd have gotten your 30 pips here for the first one. I think for the first one, touched here by 30 pips, cut here. Then the second time we got here again, and that 30 pips again. That's giving you 6 plus 6% again, plus that 10% that time, giving you 12 plus 10, 22% if you reach 1%. Then it got here again. And this one didn't give you up to 30 pips, and it broke. So 22% minus 1%. But when the market moves in profit like this, always you want your stop loss to break even to go on a risk-free run. So it was a break even. So you just leave it in like that. Now your market be 24 pips in profit and you normally expect to break even. But you can see it now eventually broke it here. And let's see, it has gone down. Oh, this market has gone down. Do you see it again? So the market is respecting it again. It came here, respected it and came down. Came here, respected and came down. And so respecting just like that. Then it went up again. Are you seeing? And to come down again. I just picked a random area. I picked a random area. And say how the market is respect. Just like that area. That's actually how we actually have different areas like that. Different target points in the market that the market always come to respect. It's more like you now, you have a sibling in Abuja, and then your entire family, let's say exactly, and then your entire family know that you went to Abuja. All right. There's no way you go to Abuja without seeing that your uncle or that your auntie. Because if you go to Abuja without seeing that your uncle or auntie, you'll be tagged a bad person. Do you understand? It's just same way. So the market has gone to this higher point. It's greeting its relatives actually here from like those areas actually here. It's actually respecting them. I can draw you on that one here. You can see similar. So the market is respecting. You can also use some to also make profits. If you lose the trade, you lose the trade. If you win the trade, you make even more money. You understand? That's just the point, the whole point of it. And this is why I tell you that there's no just one way of trading Forex. There's no one way. There is no one way. So this is actually another one we've drawn. Let's make this one purple. Let's say this is actually his sibling in Lagos. He's actually a sibling in Lagos. All right. This is a sibling in Lagos. You see it, respecting it. All right, so let's see.
If I want to trade, if I want to go live trading, you could give me money to trade.
You cannot do live trading now.
So it broke first, but see,
No,
after breaking, it came
already
down again and it
in the
respect it.
class, it
And even
said
when it
that
broke, look at this week. This
need
week that
one
fell down here,
to do first class. On the
respected
first class, you
it.
just see them
Look at this week
introducing you.
respected it.
And the
This
second
week
week,
also
you need
respected
to
it.
learn how to
This
do
one
live
respected. This one
trading.
respected. This one
And that
respected. This
one
one
week,
it broke again. This one
I'm using
respected.
I've opened
This
my
one
demo
respected.
account
So
to
you
use
can see
to
it.
trade.
That is
Because it was
how
like,
the market. So that's why the market is actually moving in waves. It's always respect points like that. So all these lines you're seeing here, this line you're seeing here, like this, trace it back.
And initially, when they
All right.
I was like, my phone click, Yomiana. Is she see there?
So all these lines you're seeing here, right? All these lines you're seeing, if you trace it back, let me show you. Let's use your normal horizontal line. All right. All these lines you're seeing on the market respect, if you trace it back, you're going to realize that these lines were actually areas that the market have actually been to before in the past. And the market has actually respected very, very well. So that is why I call it an area. So look at this white one. This white one is still there, yeah? Let me remove this thing. Let's see the market actually go back to this white one. This is the line. It broke through the white one. But after breaking through the white one, it broke through, probably was actually under the influence of news, something like that, I don't know. All right. But see, after breaking through, it went back up again. See how it is respecting it. So on this particular holiday, the idiot not gonna see his auntie in Lagos. But the next time you go to Lagos again, he has to actually go and visit his auntie. So every single support and resistance, except the market has not been to that zone before. All right, except the market has not been to that zone before. Every support and resistance was actually respected. Every major support and resistance was actually respected in the past by the markets. All right, so do you understand? So every single one like that, except the market has not been to that point before. So look at it fell down like this. All right, due to this was actually caused by news on JPY. One of those are news here. All right, one of those there news. All right, I know fundamental news doesn't what they call it affect fundamental news and technical analysis. They don't actually go hand in hand. They are more like enemies. You get. So look at how it fell from here. It didn't even respect any of these levels. It just fell through. So it eventually broke here. And then when it got, it started respecting this one. You understand? So this one now, if I put this thing here, and we go back in time, you see that the markets are actually respecting this one in the past. Let's go. Let me make this one SC. So that's actually how the market actually moves. So you can even trade by identifying this strong support and resistance and trading off of them. Anytime the market comes there, you use it as based on the trend or anything. You can actually know if the market is retrace or not. Then use your risk to reward ratio to your advantage. So if the market is going to retrace, the market to respect you should be giving you at least 6% profits. And if it doesn't respect you, at least probably just 1% loss. Things like that, you're going to have a lot of advantage over the market. So that is what we call and for where is that thing? That thing go down. So that is the fourth point. The markets usually respect certain areas of structure. So now, out of this, there are still other ones too. There are other ones like candlestick patterns. You understand? There are things like bearish engulfing candles at the end of its supports. Sorry, at the end of the resistance. Also bullish engulfing candles at the end of its supports. These are how the candles actually look, right? Okay, let me just put 5. 5. Appearance of candle. All right. And also arrangement of candles. That is where you have your M patterns, W patterns, and what do you call it, Elliott waves and things like that. So all strategies, right, are usually based off of arrangement of candles. So you hear some people say, oh, people that are using indicators to trade, they are stupid. Indicators don't work. That is absolute rubbish. You know why it's really absolute rubbish? Because these indicators are based off of certain things like this. Usually combination of one or two things like this. So let's say, for example, now RSI. If you have RSI crossing, let's say you're using like 200 and maybe like 5. If they cross up, that is actually like based off of trend, right? Because for them to cross to the upside, it's going to be that the market is on an uptrend. If you're having something like alligator, let me show you. Okay, if you're having something like alligator, let me show you what the alligator strategy is. Alligator, I have like 25. Let me look for a very trending. Yeah. What is trending at the moment? Let's see your person. Jesus, I've written a lot of things on this year's testing. Let's use this DYP. Let me hide this SMA. And then come to the indicator section and search for alligator. Let's see how Williams alligator is. So I will go and change the settings and try to 50 for this one. This one goes to be like, let's say 20. Then goes to be, well, let me use some 30. Just want to show you something. Come on, update fast. And goes to like 30 also. And this will be like 30. And let's do this one 28. Let's say this one goes to be like 35. And let's do lips offset to like 32. Let's reduce this one from 50 to like 45. Okay. All right. So let me delete my drawings. So you can actually be trading with indicator, and your indicator can actually tell you that whenever the market comes to this point, you'll take a buy. You understand? Whenever the market touches this line, if the market is on an option, whenever it comes to touch this point, you take a buy. Now look at the market touched this point. What did it do? It respected it and went as high as 171 pips. The market touched it here again. It respected and went as high as 218 pips. The market touched it here again. Then as a respect and went as high as 133 pips. Then this was news, obviously, not trade news. And I think after the news, the market reversed and went on a downtrend. Here, the market didn't respect it, it broke through. But here, the market, you understand? So if you see it now like this, now, this particular indicator now is based on trend. It's based on your up and down trend. Are you seeing? So all these indicators, when you look at your stochastic, all right, when you look at your stochastic, when they say it's stochastic, and funny enough, these indicators, they are usually created by people, like normal people, normal traders. You understand? Some of them say I haven't paid initially, but some of them are even free. You get. So when you see stochastic and they tell you that if it crosses down, you buy, or if it crosses up, you sell. Obviously, overbought and oversold level, they don't really exist in the market. But the way the market actually distributes its orders, it doesn't just keep buying, 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 except it is actually news. It normally moves in waves. You understand? So this stochastic now is taking advantage of the market moving in wave-like pattern. Do you understand? Because you know what wave is now. The market will not just come and just start going up like this. The market will just come and start going up like this, like this. Like no, it will go up and come down, go up and come down, go up. Okay. So the stochastic and all the RS and everything, their own is try to predict the maximum height the market will get to before it comes down back again. And that's why you actually have your overbought. So based on what the market has been doing in the past and setting what they call it settings, which you can actually tweak here yourself. You can come in and tweak the length of this thing and how the market actually reacts to this thing based on your own things they've actually observed, based on settings, but they actually have like four settings, but you can observe and actually tweak it. You understand? Based on, let me use one like to be like 70, like 35. You notice you're going to see this actually changed. So I make this one to be 2, 1, and I make this one to be 3. Six. So you see it. You see, it's changing because you can actually tweak it to how maybe if you have been observing that when the market moves to this length, it's going to come down, that type of thing. You can just tweak this thing to your own advantage based on it. So now this is nice, what's like, because you can't go and start calculating that length every time. So this thing is actually you're going to arrange it in such a way that it's going to actually calculate the length from you. So once the market buys up to that particular length, which you've actually observed, the anytime the market buys it, the market will come back down. This thing is going to cross up, and then you can look at it and say, oh, the market already crossed up, then it will soon come down, then you sell it and to come down, then you understand that is actually how. So they actually take advantage of the wave. So basically every indicator and every what they call it, this thing in the market actually make use of these things. Now it's now your own to now put them together, observe them very, very well, and figure out what is actually working. Then arrange your risk reward ratio, stop loss, take profit targets based on what you've actually seen. That is what you call your trading plan. Understand? Lot size, risk, take profits, stop loss, when you're going to exit the market, how you're going to enter, every single thing that's left for you to now arrange it based on what you've seen. Now with HFX is much more easier because HFX, all you're just looking for is when you arrange these things now like this, when the market gets here, does it come down? If it comes down, yes, that's it for you. When it gets here, does it go up? If it goes up, yes, that's the call for you. How long has, if you check the past, how long has it been doing that? Or it's doing that for like 3 months. What was the accuracy you got when you back tested? Or you got 80% accuracy and boom, that is it. You understand? But with MT4, it's different because you need to have a stop loss, you need to have a TP, you need to actually have an entry, you need to have an exit, you get that type of thing. But that is how every single thing is. And they're usually based off of just this. They may actually be more than five, but these are actually the five that I can actually remember right now. Do you get it? And that is the way everything is. So here you have the market in your hand, every single thing. You have it. Go back and do what you want to do. Get something for yourself. So if you come and check this indicator, you'll see lots of indicators. There are so many, 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 many indicators. See? See? Not even only indicators. Okay, these are indicators. Let's try this volatility stop. Let's try to put different ones. Let's put Williams fractals. Then we'll put trading session. This trading session looks very good. It'll just be showing you when you get your trading zone. Then we'll put Erogodi. No, Erogodi is it's an oscillator. I don't like oscillator. We'll put divergence. Divergence is sounds. So showing it down there. Then we'll put let's check multi-period charts. Let's try moving average ribbon. Elder force index. No, than index. Cumulative volume data. No, I don't like that. Chop zone. This is the zone where you're going to chop your money. Clean money flow. So I'm actually using the biggest um trading view subscription package. Okay. So that I think like something dollars per month, something like that. So that's why I'm able to put indicators up to this level. I think it's probably up to like 16 indicators. I don't want to say. I don't know how many. Let's see. Auto fibs extension, balance of power, bandwidth. Some person are going to use this to actually create chop pork curve. So most of them, no shorting. I'm trying to get no shorting again. McGinley dynamic. I know this MC Ginley stuff. Median. Okay. Oh, there's still more. Okay, my premium plan. I thought it was only maximum. Essential plus premium. Supports 25 indicators. So I've put 25 indicators, but then I can still go to ultimate, which one supports 15 indicators, but I don't need all of those things. You get, but you see it. I can't even see my charts. This is absolutely crazy. So some persons will actually like put all these things like this just to lure you. Oh, I have a bot, oh, I have this thing, and this is how it actually is and everything. But how do you pack all these things here? How do you actually observe all of them to tell that, this parameter complements that parameter or this parameter? You understand? Most times, if you want to use indicator, perhaps just one or two. Because for you to actually even say that this indicator is working with what, at least you actually have something you're looking for with the indicator. And then you dial the indicator to your personal tastes, you understand, based on what you've observed. You get, but you actually understand now all these indicators now are created by people to suit. Oh boy. So all these indicators are created by people to suit their trading style, to suit their trading style. You get, so anything that works for you, anything that works in Forex, as long as it's profitable and giving constant wins, is a strategy. It's a strategy. It's a strategy. So that is just basically that about that one. So let me let me hide this one first. What have I done? He's already confusing himself. It's confusing already. But you understand what I mean, and you understand what I'm trying to achieve, what I'm trying to actually explain. So let's hide this. You see. Now, apart from these indicators, there are still other things. So there are still other things like, because I'm not done yet. You can see auto pitchfork original. Let me delete auto pitch. It's one of it. Okay. There are still other things because if you come and check here, you can see regression trend. Now, to program all these things, you may not really be able to program them because probably it's cost a lot of effort and all of those things you get. But if you actually look at it now, you can actually see probably maybe you're looking for something that you can be using to actually get your trend. You understand your trend line. You understand to make it easier for you to spot it, or maybe something to actually help you with the trend. You understand? Maybe you want to be using trend to trade. But something using trend to trade now, find it difficult spotting those trends yourself. You understand? Then you can probably look at one of the RSI, dial it down to your taste, and use the RSI to actually indicate when the market is on an uptrend or down. So if the candles are actually above the RSI, then you know there's actually an uptrend. And if it's actually below, then it is actually on a down trend, just like that. So there are still other ones apart from this one. So you can see parallel channel. Let me move here. Your chart should never look like this, so please. Right? People that paint their chart like they only do to just impress people. Just people think I'm serious. That's why you see some memes that will say newbie traders after 1 week of trading. You understand? So newbie traders after 1 week of trading, now they're trying to actually impress their coach. So they will just pack all these things there. I'm like, coach, see my strategy. And because the coach has been training for it for a very, very long time, he obviously knows that it's bullshit. So he's just like, wow, well done. Wow, your chart is colorful. But meanwhile, he knows that this guy is doing us the bots. You understand? So yeah, so there are still other things like, let me show you other stuffs there. Like if you come under these lines, you can see a regression trend. You can see things like disjoint channel. You can see flat top, bottom. Some people actually use flat top and flat bottom to trade. Do you understand? If the market is giving consistent reactions at a particular point, they just use it to just sell the market, showing that people are actually preventing it from going above that certain places. You understand? You see pitchfork. Chiefs. This sounds like German. It sounds like a German strategy, or a German, what do you call it, tool, like a tool created by someone from Germany. Then you can see modified, you can see inside pitchfork. Then if you come under this one, you can even see more. Fibonacci retracement is a very good one. Fibonacci retracement shows you something very good. You understand? Shows something very, very good. Your retracement level. The market normally respects certain retracement points. You understand? And usually 61.8 we get. So there's no one way of using Fibonacci retracement. Like I said, the best way of actually using something is the way that actually works best for you. You get. So if you actually have Fibonacci retracement, then you can actually tweak it. You can change the retracement level you want to use. Based in after backtesting, you can probably have seen that the market always respect this point. You draw a fibs over it, you see that maybe it may even be the 50% level, it may even be the 40% level. And then just like that, maybe you add one thing to it. Maybe your trend, your RSI to know the trend of the market. So if the market is actually above that RSI and it comes down to that 40% retracement level from the fibs, you know that the market is actually going to buy based on what the market has done in the past. So you now arrange your risk to reward ratio around that stuff. You understand? Arrange your risk to reward ratio, probably 1:6. You guys, if you lose a trade, because obviously it's not good 100% right, even if you're 50% right, if you lose a trade, that is 1%. If you lose the other trade, that's another 1%. If you win one trade, that's a 6%. You understand? And that's actually it. You name it whatever you actually want to name it. And that is your own strategy. Do you understand? So you have other ones like trend-based fib extension. This is all based on trend. So that basically means you should actually have trend attached to it. And then you have fifth channel, fifth zone, fifth speed resistance fan, trend, fifth circle, fifth spiral, fifth fan, Gann box, Gann square field, plenty things. Yeah, if you come under here, you can see some other ones again. And more of these things, they keep coming, especially when you come to your indicators. More indicators keep coming. More indicators keep coming, okay? More indicators keep coming. And that is basically it's your chart should never ever ever look like this. You get, and if you're going to use indicators to trade, you should actually observe it very well. It should be like you're using it to get something, to achieve something. You understand? To achieve something, like using your RSI to determine your trend, like using your fibs, so like using your to get your maximum retracement level, like using your um using your oscillators to tell the end of a particular retracement. All right, the market moving in waves. So when it's coming down, if it oversells, to stop selling and to continue going up. You understand? If it oversells again, when it's coming down again, to stop selling and continue in that opinion. Also, you just tailor them, arrange them, you know. So there's actually no right way of trading Forex. No right way. I just put all these things here so you can actually see, so you don't actually fall for all these things that you probably see online. Right? You don't actually fall for all these fancy, flashy things. If you see someone that's actually packing things and say, oh, I have a strategy, I have this thing like this, and then you're saying, wow, this thing looks beautiful. Or more, it can just be all for how do you want to read of this now? Come on. Is it not confusing already? It's not making eyes on you. You understand? So you don't fall for it. So that is it. Let me clear all these plenty things I have done. All right. So you don't fall for things like this. All right. It's not possible for you to read all of these things. So if you see something like this and they're telling you I have a master strategy, it's 99% accuracy, this thing. Most newbies traders will say, don't more guy, I saw this strategy is very, very good. Move and enter inside it. Baba just do plenty rubbish like this for you. You understand? So you as a professional trader, in that even if you want to use indicators, you can't use plenty indicators now because for every single indicator they're using, it must actually have an end. It must actually have there must actually be a reason behind you using it. You get now for you to actually get that reason, you need to have actually like back tested, check them over and over like even traded on demo with it for like a month to see how accurate it actually is in real life scenario. Yeah, so packing all this together, how you want it to run, right? Except if you want to use AI to like help you observe all these things, include the command and tell AI to like help you check if it's going to be accurate, things like that. You get, so if you're not actually doing that, it's not possible for you to use, or it's not possible for you to use all these things to trade. So I'm trying to take all of them. So me personally, I like my charts being very, very clean. All right, that's just what I like. I don't like using indicators. I don't like using, even if I put in the probably just one indicator or two. You get, because for every single thing that is actually on my chart, there's actually a reason. Right? There's a reason why I put that or why I put that. They're not usually for fans. And before I say I'm going to be using this into trade, or I'm going to add this into this now, I've actually like done my research very well on it and back tested properly. Fractals should be this one. But that's multiple period chart. What is fractal? It's fractal. Trading session. The day trading session is a useful one. It shows you the trading sessions, Asian, New York, and things like that. You get and this factor is also helpful too. It can actually, it's also showing you what actually happened if the market was bullish or bearish during that particular period. So from what I can see, the market started from here and ended here, so it showed green. Market started from here and ended around here, it showed green. Market started from here and ended here lower, it showed red. So I feel like this fractal show you if the market was positive or negative during that particular trading day. It starts from 10 and ends 8 and ends 9. That's actually what factor shows you. So some persons may need this thing to tell what the market is going to do next. It's possible. Then this trading session shows you as you know your trading sessions. Let's see if we can actually adjust the settings. Okay. So you can actually obviously adjust the settings. So for those, you can even, I should be able to even remove some sessions, so I think. You can even name them. So you should be able to actually change the colors and visibility, change the color. So for those actually trading certain sessions, you can even change the visibility. Tone it down a little bit, so it's not going to be so glaring and so in your face. Let's see. It's like I'm making it more visible. I made it more visible. But you understand now that you actually understand what indicators actually are and what, okay, this is how to make it less visible. Oh, wait, I've removed it. Or more. Probably put it in the center of everything. You may not actually be using them every time, or probably if you want to just know the particular trading session, you just because you can actually hide most of you can hide all of them, so you can hide all the indicators you actually have. Yeah, so trading view is there for you to play with. So move around trading view, see these things yourself, observe them, play with all of them, and what happened? What have I done? So it's showing red. You can always cancel them, and if you cancel them and put them back, they're going to reset to their default setting. So I don't know what this colorful ribbon is doing down here, but it's one of those things. So that's actually it's about creating strategies and optimizing and adapting something to actually work for you. Tomorrow, I'm going to show you how to actually like draft out your trading plan. Drafting out trading plan. That's what I'm going to teach tomorrow. Okay. Because your trading plan should be tailored to your strategy. You understand? It should be tailored to your strategy. So when it comes to you doing something now, if you don't just say, oh, I'm going to use 5 pip stop loss, or I'm going to use 10 pip stop loss, I'm going to use 20 pip stop loss. No. Before you actually choose your stop loss, you need to actually backtest and see how many pips the market actually in the past 2 months that your particular stop when it formed, how many pips the market go against you? Was it 5 pips? Was it 10 pips? Was it 20 pips? You understand? You arrange all those data together, look at everything. Which one is going to give you the best one if you're using 30 pips stop loss and take profit? Which one is going to give you the most profit? If you're using 5 pip stop loss, obviously you're going to have more trades hitting your stop loss. But 5 pip stop loss, 30 pip stop loss, giving you 1:6. So you're giving 1 to 6, yeah. If you're using 10 pip stop loss, you're going to have less trades hitting your distance. But then it's going to be 1:3, lesser. And also 15 pip stop loss is going to be 1:1, but though less trades are going to hit your stop loss. But when you calculate everything now, how many percent if you had used 5 pip stop loss to trade for the past 2 months, or 10 or 15 pips? The one that actually gave you the most profits, if you had actually traded, that's actually going to be the one you're going to use. You understand? So sometimes you can even be trading self with an accuracy of 30% with MT4. You understand? But then you can be making up to like 50% profit monthly. That is why you can actually see that this week, the first trade we called out with 1% risk, we made 3% profit. So that 3% profit now, even if we even lose 2 trades in a row, 2 trades in a row is going to be only 2% loss. And this Euro GP that I've hit, that's still leaving us with 1% profit. And this UGP now that has hit TP1, because the stop loss is 5 pips and TP1 is 10 pips, that's already 2% already gained. Let me see how where the UGP has gone to now. Market is very slow today. I don't even know why. Do you understand? It has come back to break even. So it has actually hit break even. But you understand what I'm actually talking about? Because we actually arranged. So sometimes you can just catch a trailer, it's just go like 60 pips in profit once. That's 60 pips in, or let's say 50 pips in profit once. Let's say we are 1% now, right? The UGP finally hit the break even. Okay, so we can catch a trade now, 5 pips stop loss, and it just goes straight to 50 pips TP. So give us 10% immediately. So we can even catch a 10% trade self today. It's possible. Just only 50 pips TP with that 5 pips stop loss, giving us 1:10 risk to rush. For every 1% risk, 10% profit. So 10 plus 1% is equal to 11%. Then that's if you are risking 1% per trade. So imagine we're now risking 3% per trade. That means there's 3% profits. How many trades are we taking? Just 5 trades or 4 trades. Do you see it? So that is actually, so tomorrow we're talking about drafting out your trading plan. Okay. So how many person actually enjoying sorry, I'm just actually